Hello, traders. It is Wednesday, June 3rd. We're 2.5 hours into trading, and the market is a nice rally. You can see how we opened up higher. And here's how everything's set up early in the day. In the chat room, I was mentioning to everyone we might have a chance for a gap reversal, meaning the market opens higher after a big run yesterday in the last 15-20 minutes of trading. Get this big gap up. I thought there was a good chance for us to test the downside and to have that opening fail. I did short the SPY. I took about a 50-cent loss on that, which I knew that if I could risk 50 cents and we did get that gap reversal, I might be able to make $1, maybe $1.50 on that pullback as we fill in the gap. Trade didn't work out. I'm okay with it. As time elapsed, I could see that with every passing minute in the first half hour of trading that we did not get that reversal, the likelihood for us to move higher increased. We had a big spike here in 10P, which would normally signal caution that we need to watch out on our longs and that there was a possibility for the market to pull back. As I saw 10P pull back with the market compressing, I let everyone know after a half an hour of trading, folks, you can get in. It's safe. The market's going to continue to drift higher. If we would have had a reversal off of that opening gap higher, it would have happened in the first half hour. The fact that it didn't tells me that the market is going to gradually drift higher. So we got long in here, started taking some profits. Here's how the day is going to play out. We're compressing right now. We're likely to compress in a fairly tight range the rest of the day. Market will try and make a couple of attempts at the high of the day, and then it'll gradually pull back in the last 2 hours of trading. And that little pullback should eventually lead to another rally that challenges the high of the day. There's a chance in the last half hour of trading that we might see some profit taking. Sorry, I had a bullish, or excuse me, a bearish alert on LVS set. Let's take a look at that. So here's how I play these. We've got a lot of laggards that have been really rallying hard. And here's what I like to do. When I get this big type of rally in a stock that should be hitting some resistance, I like to start setting my alerts. So in this case, I picked that low right there. And if it was breached, I wanted to know about it because that would be a sign that the stock might be ready to give up some of those gains. Let's go back to the market very, very quickly. So I see us staying in this range. I would not try and short in here. The market momentum's been pretty strong. You're going to see some head fakes like this with the market looking like it's going to roll over, but it won't. Each one of these will reverse. The market will keep testing the high of the day. We'll keep in that tight range. You need to keep your powder dry for the next few hours if you're a day trader. There's really nothing going on right now. I see this market as a seller's boycott. It's a very light volume rally that tells me that the level of conviction is not very high on the buy side, and we're starting to see some rotation out of some of the really high flyers and into some of the laggards. And I bought some of these laggards earlier today. Qualcomm was a stock that I bought, and I also bought CENX. And I got to tell you, it's one of those plug your nose and buy type of scenarios when you're day trading. These stocks don't deserve to rally. And I'll show you some examples. So the fact that we're seeing that type of rotation into some of these stocks tells me that the market is in its final stages of the rally. As the street likes to call this, the dogs are barking. And when you start seeing some of the stocks like I'm going to show you rallying, it tells you that this is the final stage of this leg of the rally. So does that mean that I'm going to instantly be looking to buy puts? No, absolutely not. I will not do that until I start to see a market sell-off. Sorry about that. And so when I do see that market sell-off and technical support levels are breached, then I will start to take bearish positions. And let's go into the daily chart of the S&P 500. Where might that be? You can see how these major support levels come into play. 300 on SPY is a major technical support level. If that is breached, all of a sudden the red flags are up. 295 I see as an even bigger support level because that's horizontal resistance right here. Now it's support and it's the 100-day moving average, and we will have already breached the 200-day moving average. If SPY 295 fails, we'll also have a fail of this trend line that I'm going to draw right now. I'm going to click on that low, and I'm going to click on that low, and our GTC trend line will be established. And you can see as the market continues to move higher and as time elapses, this line will continue to extend upward right in the same general area between SPY 300 and SPY 295. So for those of you who feel that this rally is getting overextended, valuations are getting stretched, there's really nothing to show us that the recovery is going to go as planned. For those of you who want to short this market, do not take bearish positions yet. The market can float much, much higher. And all the time, you're going to be losing time decay. Even if we just go sideways, you're going to be losing time premium decay if you're buying puts. Selling out of the money bearish call spreads, also risky because the market could shoot higher. It's been defying gravity to this point. It's been ignoring the riots, been ignoring a lot of different concerns that we have across many different industries. So let it go. Just let it go higher. I will tell you that on light volume, like you're seeing here, look at this minuscule volume down in here compared to what we saw back 2 months ago. Tiny, tiny volume. That's what I mean. It's a seller's boycott. There just aren't a lot of sellers. Even a small buy order can continue to fuel the stock higher. And sellers are holding off for a better price right now. So light volume rallies, they can be stripped away in one bad day. One ugly day. That's all it'll take. 50 S&P points, whoosh. Then we're right back down to support levels. So be very, very careful in here. I view this as still a good market to sell out of the money bullish put spreads on. That's what we've been looking for. I showed you a couple yesterday. I think that's a good strategy because we can take advantage of time decay. And I am trying to sell them inside of 2 weeks so that I can maximize my time decay. So you have accelerated time premium decay as the option nears expiration. And that's a great strategy because we can reevaluate market conditions every 2 weeks. Option premiums are getting thin, meaning that option implied volatilities are declining. So we have to go closer to the money. That increases our risk. So you need to be very, very cautious. I'm going to be putting out my weekly swing trading video tonight. I will have 4 new picks, and I'm going to be very, very cautious with those picks. We're going to need to get filled at our price, or we will take a pass and we'll sit in cash patiently. And if the market is going to head higher in the next month or so, we will have clarity because we'll have that information. And we don't know how consumers are going to react right now. Are they going to go back to work and feel that their job is secure? If the answer is yes, they'll spend and there will be pent up demand. If they go back to work and they find that the orders aren't coming in, and they're worried that after the stimulus runs out that they're going to lose their job, then they are not going to spend. And spending really is the key to this recovery. Did get a little bit of good news yesterday. We had Visa announce that sales in May were up, so that was good news. We had ISM services come out today. That was a pretty decent number. I believe it came in at 45. It still indicates contraction, but the bottom did not fall out, so that was good. We also had about 2.7 million jobs lost in the private sector in the month of May. That was the ADP report. That was also much better than the 11 million jobs that were expected to be lost. So there's some pretty good little signs happening in the market right now and in the recovery. China also released their services PMI. It came in at 55. They are the litmus test for what our economy will do because they started to reopen in April. That was good news. They also had a manufacturing PMI that came out. I believe it was above 50. That was also pretty good. So things seem intact, but if you start looking at valuations and you listen to CEOs talk about how Q2 is going to be much worse than Q1, I think that some of the air is going to get let out of the balloon here in the course of the next month, month and a half. And then also we'll have to gauge to see what happens with consumers. Are the riots going to keep people out of stores? There are a lot of variables right now, and I just don't see on a valuation basis that the market has a lot more upside to it. So play it safe. I'm trading half size on my day trades right now. I'm trading quarter size in the afternoon. Part of that is because the market momentum has waned and we're seeing relatively compressed intraday ranges. MOS has breached below the trend line. So this is another one of those high flyers. I do actually kind of like MOS. So I'll show you that. A little bit of a cup and handle formation right in here. We've got a horizontal breakout through resistance. 100-day moving average is right above. This is a fertilizer producer. If the U.S.-China phase one deal continues, China is going to be buying more grain from us. There were 3 shiploads of grain that were accepted by China. So all of President Trump's bluster has fallen on deaf ears. It looks like they're going to continue with that phase one trade deal. That's good for farmers because it increases the demand for their crops. It increases the amount of money that they're able to bring in, which means that they are likely to reinvest that in fertilizers, which will help them improve their yields. So, yes, MOS, I could make an argument that yes, that stock actually might present a nice opportunity here. And if I draw an upward sloping trend line, you can see that it intersects right around this horizontal support at the $12 level. And I just looked at the June expiration. Those would be the June 19 $12 puts. You can get 20 cents for them. And on a $12 short put requirement, if you put up 20% of the strike price, you would have to put up $2.40 per contract. You're going to be making 20 cents in the course of the next 2.5 weeks. That represents almost a 10% return on that naked put right, but you have to be willing to buy the stock at $12. Actually, $11.80 since you took in 20 cents of premium. If none of this makes sense to you, you should brush up on your options trading strategies. OIC.com or .org is a great resource, Options Industry Council. And I will put a link in today's description so that you can go and read about vertical spreads and selling naked puts. Selling naked puts is not risky if you don't use a lot of leverage. And if you intend to buy the stock, it's a great strategy. So that's one that I would suggest. It's a laggard that's starting to catch a little bit of a bid. I think it has resistance at the at the 100-day moving average at 1425. But I think it's able to hold that upward sloping trend line. And I do like this horizontal breakout. So MOS would be one that I would watch. So let's take a look at what some of these stocks are doing. And I'm going to show you examples of stocks that are running where you just got to scratch your head and go, what the heck? So these are the dogs. SPG, Simon Property Group, REIT. They are a REIT, Real Estate Investment Trust. They are the largest mall operator in the country. You have companies like Kohl's, Macy's, JCPenney's going bankrupt, Neiman Marcus going bankrupt. All of these major anchor stores within the mall are hurting in a major, major way. And who knows if they're going to be able to make their lease payments. If they start closing down stores, a lot of these malls won't have the anchors to attract consumers. And the whole coronavirus really forced consumers to go online. And now they're starting to get used to making online purchases. They like having their goods delivered right to their doorstep. I think mall traffic is going to be down considerably, and I think that this is going to transform the entire brick and mortar retail business. So, doesn't matter today. The stock is off to the races and challenging this horizontal breakout right here. I think that stocks like this, as they rally, especially if it starts getting up to a 100-day moving average, man, they become really attractive shorting opportunities. But on a day like this, the dogs are barking. When you can see it trying to get through this horizontal resistance right here. I do like this little upward sloping trend line. It has resistance at the 100-day moving average, so I would not day trade this, but casinos are also hurting. The traffic to Macau has been very, very low, and it's going to take them many months to try and recover. You cannot have half-empty blackjack tables and craps tables and have social distancing in the slot machines and make any kind of decent money. So this is not going to be over as soon as everything reopens, and it's not going to be back to business as usual. So I'm going to look into heavy buying. Boeing Airlines are hemorrhaging money like mad. Order cancellations left and right for airplanes, yet the stock is moving higher. Again, another dog moving higher. Let's continue to take a look down here. UAL, airline stock, hurting in a big way. People not wanting to travel. Save. There's another one. Here's a good one. Six. This is Six Flags. I have a Six Flags that's a mile away from my house. They aren't even close to reopening. They haven't trained any of their summer employees. They haven't been able to. And they're going to miss the meat of the theme park business. And this is one of the busiest theme parks between Milwaukee and Chicago. They're not even close to opening. Yet look at the stock. It's moving higher. It's through the 100-day moving average. You need to be very, very careful on these. Again, the dogs are barking. There's Nordstrom right there. Disney. There aren't even sports to televise on ESPN. The theme parks aren't really reopening. You've got Disney Shanghai reopened, and there are restrictions that they can only have 30% capacity. If you're in a restaurant business, you cannot operate at 30% capacity. You need those restaurants packed. It's economies of scale, and that's how restaurants make money, and it is a very low margin business. So I am not buying into this wave of buying that's seeing a bid under all of these laggards. It tells me that the rally is getting very late right now. And so I'm very, very cautious. I'm neutral. I'm not going to short the market until I see some signs, some technical breakdowns. Even then, I think the best opportunity will not be to short the market and not to look to make a bunch of money like back in here. I think that what we'll see is we'll see a breakdown here. We'll probably see a retest. It'll be a higher low, and that dip that might come later this summer will probably set up a really good buying opportunity heading into fall and heading into year end. So that's how I'm looking at it from a very long term perspective. On a short term basis, cash is king. I just don't see that the upside rewards justify being long right here. So, enough said. Let's go and see if we can find a few stocks that might be attractive. I showed you the MOS trade. I think that one might work. And let's go and take a look and see if we've got anything else that's shaping up here. I'm going to go in and take a look at after earnings to see if anything is on the list there. ZM, that's a very, very strong stock. They knocked the cover off the ball. Let's take a look at the 5-minute chart. You saw how easy that was for me to go in. Bullish after earnings. And these stocks that are on this list announced yesterday after the close or today before the open, and they're trading above the prior day's high. You can see how ZM looks very, very good. I think their revenues were up 169%, so just unbelievable. And they've benefited from the coronavirus. I think the stock looks good. They had some security issues. They've announced that that is their priority. They're doing all sorts of encryption to avoid any kind of hacking. So I like the stock. I think it sets up pretty well. It's been able to rally with the market. It's making a new relative high. It's been a big runner, but justified with revenue increases like that. You can see the big volume in here. Does it set up well for a bullish put spread? Maybe if you're keying off of that $180 level, but with the stock at 221, it's just a little too far out of the gate right now for me to want to try and sell any kind of bullish put spreads. Probably, yeah, you're just not going to get much of a credit. I need at least a tiny little pullback. I do like it on a day trading basis, though. I think this is one that you can get long the stock, and I think it's a stock that you can hold overnight as well to try and capture this upward momentum. And you also have a strong market tailwind fueling that move as well. So I would say that ZM is probably going to be my pick of the day. And I do like selling those MOS out of the money, $12 June expiration, $12 puts for 20 cents. That trade generates a 10% return in a 2-week period. That's a really nice return. I think the probability of success on that is also very good. CRWD, let's see what we've got going on there. Now here's one you can see how I put this alert right here. if the stock took out the low of the day, I wanted to know about it because then there's a chance for it to fill in this gap right here, and there might have been a little day trading shorting opportunity. But let's take a look at it on a daily basis and see what we've got. We've got some long red candles here, got a long tail above body right here. I don't like it. That tells me that it's starting to hit some resistance in here. I'd like to see it come back and try and fill in this gap and hold that $88 level. Then I would have a nice bullish put spread that I could sell, maybe keying off that $80 level. That's how I would play CRWD. Let's take another look, see if we've got something on strong after earnings. These companies have announced in the last 2 weeks. ZS, that's another high flyer right there. This stock looks good, but you can see the long tails above body. We want that to come in probably around that $97 level. If it comes into $97, then we have to be patient, but I would definitely see being able to sell something right on that opening price there around that $88 level and selling maybe an 88, 87 bullish put spread for a 20-cent credit. That's how I would approach it on the notion that this gap right here holds. But very, very nice reaction, really strong. Stock a little bit ahead of itself. Want to see how it reacts when the market comes in. So wait for the stock to pull back. Try and sell the 88, 87 bullish put spread. You're going to need to see it around that $96 level. Well, how do I set myself up for that, Pete? Well, you click GTC right down here, and you double click on the bottom of that candle right there. And lo and behold, I'm going to get a GTC alert when the stock breaches that point. Doesn't matter if it's today, tomorrow, a month from now, I'm going to know about it. I'm going to get a pop-up alert, and then I'll start considering what types of bullish put spreads I could sell at that $88 level. When you're doing analysis like this, you're flipping charts, you're doing all the heavy lifting, you're doing all the hard work. Take the extra second or two to drop these alert lines at key price points. It's going to be really nice for you when you start getting these pop-up alerts and you don't even have to look for trades. They're delivered to you on a silver platter. So regardless of what trading platform you're using, set your alerts. We're able to actually set these alerts on diagonals as well on trend lines. So we use those extensively. Hey, there's one that we highlighted yesterday. Let's take a look at those two stocks, WSM. I like this breakout through horizontal resistance. You can see how the stock has been moving higher. It gapped up today, but it gave back some of those early gains. And now it looks like it might be ready to get back on track. You have this downward sloping trend line that's been breached. Let's put up the 1 OSI indicator, see if it's got some relative strength. And you can see how it's starting to gain a little bit of momentum in here. But I like WSM as a bullish put spread. They do a tremendous amount of online sales, and that's why this retailer is different from the rest. I also highlighted another stock yesterday. It was DLTR. Let's take a look at that one. DLTR, a little choppy. You can see it's giving back some of the gains. Let's go into that daily chart, see where we're at there. As long as we're able to hold this support level right here at the $96 level, I'm cool with it. We were selling a bullish put spread down below this 200-day moving average. I still think that works, but you want to come down somewhere in this $90 level, $92.50 level. It just needs to stay flat. As long as it does that, it holds these gains, we're good. They also had a tremendous spike in retail sales. They were open during the coronavirus, so they're actually benefiting from this. Let's keep looking, see what else we've got here. LOW was strong after earnings. This horizontal breakout right here at 125 is holding. You could try and sell a bullish put spread below that 125 level. I think that also sets up well for a trade. Strong after earnings was the search that I used to find the stock there. Again, notice I'm focusing only on bullish trades because that's what the market is telling me I need to do. As long as the trend line's intact, as long as the major moving averages are intact, as long as horizontal support is intact, we do not pick market tops. That's the best way to drive your account to zero. We wait for technical breaches, then we take action on the short side only when we have confirmed selling. So I needed to nail that home because I'm hearing people every day tell me they want to buy puts, they want to buy puts, they want to buy puts. What do you like on the short side? Nothing right now. You need to stay long, stay passively long, sell out of the money bullish put spreads, distance yourself from the action, take advantage of time premium decay, and don't do a lot of them. This is a time to really scale back your exposure. We've had a bunch of bullish put spreads on. They've all been expiring. We've got 4 positions on right now. I'll have 4 new trades tonight. Maybe we get filled on 4 of them. I doubt it. We'll probably get filled on 2 of them because I'm going to have them away from the market. So the stock has to come our way for us to get filled. I need to get in at really good prices on all of my trades right now. This is a time to be passive. This is a low probability trading environment. So I've given you a few stocks to take a look at. I like ZM. I think that's going to do well the rest of the day. I think if you buy it later in the day, I think it does well overnight. I also like that MOS put spread outright using the $12 strike and the June expiration. And I believe that the market is going to compress in a tight trading range. There you go. Gee, it looked like everything was falling apart. Buy some puts. No. We're going to be in this trading range. We'll test the high. We're going to pull back again. You get a little bit of a dip probably 2 hours before the close. That probably will set up a nice little buying opportunity. We'll get another run up to the high of the day. That I will look to trade from the long side. How is it going to play out in the very last few minutes of trading? That I don't know, and I won't know until I see the 1OP indicator. It will tell me if we're going to break out to a new relative high in the last hour of trading, or if there's some weakness and some potential profit taking later in the day. Unfortunately, I don't have that information right now, and I won't know until I see it. So that's it for today. Thanks so much for watching. If you like the content, please give it a thumbs up. Also, subscribe to the YouTube channel and turn on your notifications. That way, you'll never miss one of these videos. I promise you, it'll have tons of trading ideas in it, actionable trade ideas for today and tomorrow. Thank you so much. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.